Welcome back to the deep dive. Today, we're diving into some interesting movements, some shifts, really in the Indian stock market.
Yeah, you're right. There's been quite a noticeable downturn recently.
Exactly. And we want to, really get to the bottom of what's driving this.
Absolutely.
What are the key factors at play here? And what does this mean for investors, looking at different sectors within India? We've got some great resources for this deep dive, recent market analyses, sector-specific reports, all sorts of good stuff to give us some solid insights.
That's right. And the goal here isn't just to, sort of state the obvious about how the market's been performing.
Right.
It's to really unpack those interconnected factors that are contributing to this. Think of it as peeling back the layers to understand the core influences shaping the current landscape. We're going to distill those essential insights from these reports and then look at potential, paths forward, particularly in those key areas of the Indian economy.
Okay. So from what we're seeing in these reports, we've got five sort of interconnected forces that seem to be shaping, the current market.
Yeah.
Global economic concerns, foreign investors, kind of on to back from the Indian market, challenges within India's domestic economy, some ups and downs with the value of the Indian rupee, and then specific sectors, kind of getting hit particularly hard.
What's interesting here, I think, is that there's a bit of a domino effect happening. So, if you've got uncertainty on the global stage, that can make foreign investors nervous, right? They start looking for safer havens for their money.
Yeah.
And then that, in turn, can actually amplify any economic pressures that already exist within India. So it's this complex interplay.
Right, yeah. It's
Yeah.
all connected. So let's start by tackling those global economic concerns. The reports highlight, ongoing trade tensions, particularly involving the U.S. And it feels like these aren't just isolated trade disputes. They're actually kind of shaking up the way goods and services flow globally. What do you think?
I think that's spot on. Even if India isn't the direct target of every single tariff out there, the resulting uncertainty, in global trade, it definitely casts a shadow, right? It impacts investor confidence. It makes businesses more cautious. It has these knock-on effects that ripple outward.
Right. And it's not just about tariffs, right? We've got, we're also seeing a slowdown in some major economies. I'm talking China, the European Union, these global economic powerhouses.
Yeah.
How does that affect India? What's the connection there?
Well, think about it. When you've got reduced economic activity in those big markets, that translates to lower demand globally.
Of course. Yeah.
And for India, a significant chunk of our growth comes from exports, so a global slowdown.
Yeah.
That's going to directly impact our manufacturing. It's going to impact our overall economic expansion. And naturally, that makes investors a little hesitant.
Makes sense. And then there's this whole thing with interest rates in the U.S. The Federal Reserve seems to be keeping those rates elevated, and it feels like there's a pull, almost a gravitational pull, on capital away from emerging markets like India. Can you explain what's going on there?
Sure. So higher interest rates in the U.S. make U.S. bonds a more attractive investment. They're seen as relatively low risk, and they've got the potential for better returns.
Okay.
So you can imagine capital starts flowing from emerging economies, including India, back to the U.S., all chasing those better yields.
Like a magnet, right.
Exactly.
Okay, so that brings us to our second point. Foreign investor outflows. Our sources are pretty clear that this movement of capital out of India is a big factor in this, recent market softness. We've already talked about U.S. interest rates, but what else is prompting this exit? What are the other factors at play here?
Well, a big one is the increasing strength of the U.S. dollar.
Oh, okay.
When the dollar appreciates, it actually makes investments in other countries less attractive.
Yep.
Because the returns, once you convert them back into a stronger dollar, well, they're diminished.
Yeah.
It's all about currency risk.
It's almost like the value of your overseas investment shrinks in your home currency simply because, the exchange rate shifted.
Exactly.
Yeah.
And then you add in times of global economic uncertainty like we're seeing now, you naturally get this increase in risk aversion. So investors flock to assets that are perceived as safer. And often, developed markets like the U.S. are seen as lower risk compared to, emerging economies during these turbulent times.
Right. It's like seeking shelter from the storm.
Exactly.
And finally, the reports mention this concept of profit booking. Can you unpack that a little bit for us?
Yeah. So, we saw some really robust market performance in 2023 and early 2024. A lot of those big institutional investors, the ones who had accumulated some significant gains, well, they're decided to lock in those profits now.
Okay.
And that selling activity That naturally contributes to the downward pressure that we're seeing.
Right. Okay, so we've got these global headwinds, foreign investors pulling back, and then, of course, we can't ignore the domestic economic challenges that are, also playing a role here. What are the big issues that we're seeing in India?
Well, one of the primary concerns domestically is inflation. Prices are rising, especially for essentials like food and fuel, and that's putting a squeeze on household budgets.
Yeah.
And when consumers have less spending power, that raises concerns about the profitability and growth prospects of businesses, right?
Right. And I imagine that inflation also puts pressure on the Reserve Bank of India to maybe raise interest rates to try and get it under control. But then that can create its own set of problems, can it?
Absolutely. Higher interest rates make it more expensive for businesses to borrow money to expand. It also makes it tougher for consumers to take out loans for, big purchases. And all of that can potentially slow down economic growth. It's a real balancing act for the RBI.
It is. It is. Beyond inflation, the reports also point to some worries about unemployment, and particularly in sectors like IT and manufacturing,
That's right.
which is a little concerning considering the job market was, kind of improving after the pandemic. What's going on there?
Yeah, it's true. When you have sluggish job creation, especially in those key sectors that historically have really driven growth, like IT, it can impact consumer confidence.
Yeah.
People start holding back on spending.
Right.
And the recent layoffs in the tech industry haven't helped. They've definitely added to this sense of caution.
It's like a ripple effect.
Exactly.
One thing leads to another. And it seems like these domestic challenges are also reflected in how companies are performing. The reports mention, sort of muted corporate earnings,
Yeah.
particularly for mid-cap and small-cap companies, and also in some of those high-growth sectors. Can you elaborate on that a bit?
Yeah. So when companies are reporting lower than expected profits, you tend to see stock prices adjust,
Mm.
especially in those sectors where investors were really banking on rapid expansion.
Mm.
It's a sign that the economic environment might not be as supportive as initially thought.
Makes sense. Okay, moving on to currency fluctuations. We've seen the Indian rupee kind of, bouncing around a little bit lately. What's driving that?
Well, like we talked about earlier, a strong U.S. dollar is going to put downward pressure on other currencies, including the rupee. It's just natural. But domestic factors are playing a role too.
Okay.
India's trade deficit, meaning we're importing more than we're exporting, well, that increases demand for foreign currency, and that can lead to the rupee depreciating.
Okay.
It's all connected.
Right. Now, the Reserve Bank of India has been stepping in, right, trying to stabilize the rupee. Is that a sustainable approach, do you think, in the long term?
Well, RBI intervention can definitely provide some short-term relief, smooth things out a bit. But, if they intervene too much or for too long, it can drain the country's foreign exchange reserves. It's a tool to be used strategically, but you also have to address those fundamental economic factors that are at the root of it all.
Right. You got to fix the underlying problem.
Exactly.
Okay, last but not least, let's look at these sector-specific pressures. The reports highlight a few key areas that have been really feeling the heat. Let's start with the IT sector, a powerhouse for the Indian economy for so long. What's going on there?
Well, they're facing some headwinds,
Mm-hmm.
mainly because global demand has softened,
Mm-hmm.
especially from those big markets, the U.S. and Europe.
Yeah.
They're big clients for Indian IT services.
Yeah.
And then there are concerns about those potential U.S. tariff increases we talked about, and some of their clients are starting to cut costs. So naturally, their growth forecasts and their stock valuations are taking a hit.
Okay. What about banking and financial services? That sector's been pretty strong, but the report suggests some profit booking there, too.
It's interesting, right?
It is.
Because the fundamentals are generally sound. You've got strong credit growth, good profitability, improving asset quality, but there has been some profit taking. And I think that can be linked back to those rising interest rates in the U.S., causing foreign investors to pull back a bit. And then there's some general concern about liquidity and the impact of those ongoing regulatory changes from the RBI.
Makes sense. But what about the auto sector? Seems like there's decent demand within India, but they're facing some headwinds too. What's the situation there?
So the automotive industry is grappling with a couple of things. First, the cost of raw materials has gone up. And second, there are still some lingering supply chain disruptions, especially for things like semiconductors.
Right.
And those issues can really squeeze profit margins, even if sales volumes are healthy.
So even though people are buying cars, they're not necessarily making as much money. Okay. And lastly, the reports touch on startups and those newer, tech-focused companies. And it looks like they've experienced a pretty significant correction in their stock prices. What's behind that?
Well, a lot of these companies went public with really high valuations,
Mhm.
often based on those future growth expectations.
Yeah.
But as market conditions have become tougher and those concerns about, actually achieving profitability have increased, investors they're reassessing.
Yeah.
And that's led to some pretty substantial price drops.
Okay. So that was a great overview of all the factors contributing to this downturn. Now let's shift gears a bit and talk about, potential investment strategies. We'll go sector by sector based on what our sources are saying for 2025.
Mm.
And let's start with the Indian banking sector. It seems like there's a mix of positives and areas for caution.
Yeah, there is. On the one hand, you've got some really positive signs. Lending is growing strong. Profitability is healthy
Oh,
with good net interest margins. That's the difference between what banks earn on loans and what they pay on deposits.
yeah.
And then you've got continued government support for those digital banking initiatives, and we're seeing a decrease in non-performing assets.
Probably the MPAs.
Yeah,
Those are loans that aren't generating income.
exactly. So lots of positive signs there.
But on the flip side, we've also got those headwinds, the rising U.S. interest rates, potential for foreign investors to pull out, concerns about liquidity, and those stricter regulations from the RBI. So how do all those factors translate into actual investment recommendations for different kinds of investors?
Well, it really comes down to your time horizon and your risk tolerance. Are you in it for the long haul?
Yeah.
Or are you looking for quicker gains?
Okay. So for investors who are, in it for the long term, stability is key.
Exactly. And the reports are pointing to large cap banks like HDFC Bank, ICICI Bank, and State Bank of India, or SBI. They're known for their steady earnings and growth.
Okay.
And then you've got ICICI Bank. They're really strong on digital services.
Right.
And SBI, they could benefit from government spending, and they've got that huge reach.
Makes sense. What about investors who are, looking for those quicker gains, maybe those short-term traders?
Yeah, for those folks, the advice is to look at those mid-sized banks, especially when the market dips.
Okay.
But keep in mind, they can be more volatile.
Right. Higher risk, higher reward.
Exactly. And then for the dividend investors, the ones looking for that regular income, those PSU banks like SBI and Bank of Baroda, they've got a good track record of paying dividends.
Okay. Now, what about investors who are a little more comfortable with risk, those who are really looking for potentially higher returns?
Yeah, those investors might consider smaller banks like
Mhm.
IDFC First Bank. They're aggressively expanding their retail lending.
Okay.
And then there's Federal Bank. They're known for their digital focus and their strong base of NRI customers.
Interesting. So looking ahead to, 2025, 2026, what's the overall outlook for the banking sector according to these analyses?
I think the future looks pretty bright for Indian banks. We've got that ongoing expansion of digital banking. There's potential for consolidation through mergers and acquisitions, especially among those PSU banks. And that can really improve efficiency.
Right.
And then there's continued growth in loans to individuals and small businesses.
Mm.
And the expectation is that the RBI will keep interest rates relatively stable.
So all in all, a pretty positive outlook.
I think so, yeah.
Okay. Let's move on to another crucial sector, the Indian pharmaceutical industry. This one also seems to have a combination of strong growth drivers and some notable challenges. Earlier we mentioned that PLI scheme.
Yeah,
For anyone who might not know, that's the government's production-linked incentive scheme, and it's designed to, really boost domestic manufacturing.
exactly. So the pharma sector is benefiting from a couple of big trends. First, there's strong global demand for generic medicines, and India is a major supplier.
Right.
The PLI scheme is aimed at making India even stronger in that area. And then second, you've got rising healthcare spending, both in India and globally. Plus, the industry is moving into those higher value areas, things like biopharmaceuticals and specialty drugs. So lots of potential for growth there.
Lots of potential, but also some risks, right? The analysis talks about the need for approvals from regulatory bodies like the U.S. FDA.
Right.
And there's that reliance on China for for those active pharmaceutical ingredients, the APIs.
Yeah.
And then, of course, there's always that intense price competition, especially in the U.S. market.
All true. Navigating those regulatory hurdles, especially in a market like the U.S., managing those supply chain vulnerabilities and dealing with that fierce price competition, especially for generics, those are the ongoing challenges for Indian pharma companies.
Yeah. So let's talk about investing in pharma stocks in 2025. What are some of the recommended strategies?
So for long-term investors, the advice is to stick with those large cap companies like Sun Pharma. They're strong in specialty drugs. And then you've got Dr. Reddy's with their robust export business and their growing biosimilars portfolio. And then Cipla, they're a leader in respiratory and chronic disease therapies.
Okay.
The key is to favor companies that are expanding into biopharmaceuticals
Okay.
and be a little cautious about those that are too reliant on that U.S. generics market. It's just so competitive.
Right. Makes sense. What about those short-term traders?
Well, they might find opportunities by buying during those temporary dips that happen when there's market news, or by watching those mid-cap stocks like Biocon and Natco Pharma and seeing how they react to news.
Okay. And for those seeking, stable returns and income, dividends,
Dividend-paying companies like Divi's Labs and Torrent Pharma, they could be good options.
solid, solid. And looking further out, the long-term prospects for the pharma sector seem quite encouraging, don't they?
They do. The growth in biosimilars and biopharmaceuticals, the expanding domestic healthcare market, the government's push to reduce reliance on China for those APIs, and the expansion into global markets. It all points to a positive long-term outlook.
It does. It does. Okay. Now let's turn our attention to a sector that's been getting a lot of buzz lately. The Indian defense sector. The analysis here is pretty optimistic, and it seems to be fueled by government initiatives and those geopolitical factors that are always at play.
The defense sector's definitely got a lot of tailwinds right now. You've got the government's Make in India initiative, the increasing defense budget, the focus on exports, greater private sector participation, and the current geopolitical landscape. It's all creating a lot of momentum.
Right. Right. Now, of course, this is a sector that's very closely tied to government spending, and those projects, they can take a long time. So there must be some inherent risks involved. What are some of the challenges highlighted in the reports?
Well, one of the biggest challenges is just the long and complex approval process for those defense contracts. It can take a while to get things moving.
Right.
And then, of course, there's the reliance on government orders.
Yeah.
That's where the revenue comes from, and the competition is heating up. So those are all things to consider.
Okay. So how should investors be thinking about the defense sector in 2025?
For long-term investors, it's all about focusing on those large-cap companies with a solid track record.
Okay.
Companies like Hindustan Aeronautics Limited, or HAL, they're in aircraft manufacturing. Farad Electronics Limited, or BEL, they're in defense electronics and radar systems.
Mm-hmm.
And then there's Farad Dynamics Limited, or BDL. They specialize in missiles.
Got it.
And, of course, always keep an eye on India's defense export policies. Those can change.
Right. Always evolving. Now, for those short-term traders.
They should be watching for those big contract announcements. And, those mid-cap stocks like Data Patterns and Paris Defense, those can be more volatile, which means potential opportunities.
Okay. And for the investors looking for those stable returns.
BEL and BDL, they tend to pay regular dividends. They could be good options.
Right. Makes sense. And overall, it seems like the future is looking pretty bright for the defense sector, wouldn't we say?
Absolutely. The potential for growth in defense exports, the focus on those new technologies like drones and AI, the increasing role of the private sector, and that strong pipeline of orders, it all points to a positive trajectory.
Exciting times. All right, let's shift gears again and talk about the Indian IT sector. It's faced some challenges. We've talked about some of those. But it seems like the long-term growth story is still very much intact, driven by those massive trends like AI and digital transformation.
Yeah, I think that's a fair assessment.
Okay.
There are short-term concerns, like the potential recessions in the U.S. and Europe, those client spending cuts, those high employee costs. They're definitely headwinds. But those fundamental growth drivers, things like AI, the shift to digital, cloud computing, cybersecurity, those are still extremely powerful.
They are. So even with those headwinds, there are still investment opportunities. Where should investors be looking in 2025?
Well, for those long-term investors seeking stability, those large-cap leaders, companies like TCS, Infosys, HCL Technologies, they're still the core holdings.
Okay.
For investors who are a bit more growth-oriented, Those mid-cap companies like LTI, Mindtree, and Persistent Systems, they're interesting. Look for the ones that are really pushing the boundaries in AI, cloud, and digital transformation.
Got it. What about the short-term traders?
They should be watching those quarterly earnings announcements very closely, looking for those breakout mid-caps. And of course, keep an eye on the US dollar to Indian rupee exchange rate. That can play a role.
Makes sense. And for those who are, looking for those defensive stocks, maybe those that pay dividends.
TCS and Infosys, they're known for their dividends, and they tend to be a good buy when the market dips.
Okay. So overall, what's the long-term outlook for the IT sector?
I think it's bright. The adoption of AI and automation across industries, the growth of cloud and cybersecurity, the rollout of 5G, and the digitalization of the auto sector. It all points to a lot of potential.
It does. It does. Okay, now let's talk about a sector that's really undergoing a massive transformation. The Indian auto and electric vehicle sector, the EV sector.
Yeah, this is a really interesting space right now.
It is. You've got those established automotive giants,
Yeah.
and then this whole wave of, high potential growth in the EV space. It's pretty exciting.
It is, and it's being driven by a few things. You've got strong government incentives to promote EVs, robust domestic demand for vehicles in general, the global shift towards electric mobility, growing auto exports from India, and the emergence of all these new automotive technologies.
It is an exciting time. But the shift to EVs isn't without its bumps in the road, right?
Right.
I mean, the analysis mentions things like the high cost of batteries and the need for more charging infrastructure as those, as key challenges.
Yeah, absolutely. Those are big hurdles. EVs are still more expensive upfront for consumers, largely because of the battery cost. And the lack of charging stations creates that range anxiety. Plus, there's increasing competition from global EV makers. And those supply chain disruptions, especially for things like semiconductors, they're still an issue.
Right. So how should investors be thinking about this rapidly changing landscape?
For those long-term investors, focus on the established players who are making serious moves in the EV space.
Okay.
Companies like Tata Motors, they've been early leaders in EVs. Rudy Suzuki, they're starting to get into the game. Mahindra and Mahindra or M&M, they're strong in SUVs and they're expanding their EV offerings.
Okay.
And then there are companies that are making key EV components. Companies like Sona BLW, they make drivetrain parts, and battery producers like Exide and Amara Raja.
Okay. What about those short-term traders?
They can look for opportunities by buying on those market dips, trading those mid-cap EV-focused stocks, and really paying attention to policy announcements and those sales data releases.
Makes sense. And for the folks seeking, stable returns, maybe some dividends?
Bajaj Auto, Hero MotoCorp, those traditional auto companies, they could be good options. And then you've got those auto parts companies and battery companies. They tend to have more steady revenue streams.
Okay. And overall, the future for the auto and EV sector looks pretty dynamic, wouldn't you say?
It does. Rapid EV market growth, strong demand for SUVs and those premium EVs, advances in battery technology, potentially even things like hydrogen fuel cells, and the global expansion of Indian auto companies, it's all pointing to a very interesting next decade.
It is. It is. Okay, last but not least, let's dive into the Indian energy sector, another sector undergoing a pretty massive transformation.
Yeah, you're right. It's a major shift, driven by a few key things. Rising energy demand, government support for renewables, those PLI schemes to boost domestic manufacturing, the build-out of EV charging infrastructure, and privatization efforts in the power sector. A lot.
It is. It is. But it's also a sector with a lot of, potential risks and challenges.
Whoa.
We've got those high debt levels for many companies. And of course, there's still that reliance on traditional energy sources like coal.
Those are valid concerns.
Mm,
The energy sector requires a lot of capital investment, and government policies can have a big impact. Renewables are growing fast, but coal is still a big part of the mix in India. And globally, there's a lot of competition in those clean energy technologies.
right. Okay. So given all of that, how should investors approach the energy sector? What are some of the key stock recommendations?
Well, the analysis provides a framework. It talks about how to allocate your portfolio within the sector based on your risk tolerance.
Okay.
So for conservative investors, they recommend a larger portion in those established traditional energy companies, the ones with those steady revenue streams and those reliable dividends, like NTPC and Power Grid.
Okay.
Then for the more balanced investors, they suggest increasing exposure to the leading renewable energy companies like Adani Green and Tata Power. And for those aggressive investors, well, they might consider a bigger allocation to those high-growth areas like green hydrogen and those companies involved in EV charging and battery storage. those companies like Tata Power and Reliance.
Okay.
They even suggest looking at some of the smaller, potentially more volatile renewable energy players, companies like Suzlon. But the key takeaway is you got to align your energy investments with your risk appetite and your long-term goals. This is a sector that's undergoing a huge shift.
Right. Huge shift. And what kind of returns can investors expect from these different approaches?
The analysis suggests that a conservative approach might yield, around 12–15% annually, while a more aggressive strategy could potentially deliver 20–30% or even more. But of course, the higher potential return comes with higher risk. It's all about finding that balance.
It is. It is. Well, this has been an incredibly insightful deep dive into the Indian stock market. We've covered a ton of ground here, from those global and domestic factors that are contributing to the recent downturn to those specific investment strategies across all those key sectors.
And the biggest takeaway, I think, is just how interconnected all these forces are. What's happening globally with the economy directly affects foreign investment, which then impacts our domestic economy in those individual sectors. It's a complex web.
It is. It is. And when we look at those individual sectors, it's clear that each one presents its own unique set of opportunities and challenges.
Absolutely.
So as we wrap up, here's something to think about. Considering all those long-term trends we've discussed, which sector do you think has the most potential to really transform the Indian economy and, by extension, your own investment portfolio over the next decade? It's a question worth pondering. Thanks for joining us for this deep dive.
Thanks for having me.